So the question was, because I said this morning, I worked my way out of a trade that went against me. And so what does that actually mean? So I picked this one because it's a good chart to a pattern to watch or follow. So let's say that we got into this stock when it popped in this sorry, let me just say this about that. It did pop up to 345, pulled back, and I thought, okay, this is probably going to be support for it. And I put in a buy order, and I get filled here at the 325. I think I was filled at 327. And it looks like it's going to hold. Then all of a sudden it just gets whacked, kaboom, off it goes. Now this chart is more. This chart is more dramatic than the actual move. I mean, this is only a 20-cent move, but it's the pattern that I'm interested in. So it just gets whacked, comes off, sells down to support, which I know. Now I didn't get a chance to get out. But what happens is it starts to bounce from here. So to work my way out of the trade, I add to my position. But I know it's only going to be a short bounce. If this is a 1, 2, 3, 4, 5, I'm looking for this to trade 5. And I'm looking for this bounce just to be enough to maybe, get at least break even on this. Now, this is not a strategy that, this is a very, to work your way out of a trade, you really know. You have to be in the market a long time to figure out how to do this or to trade it or take that risk, because it can go against you in a very in a very quick way, very badly, in which you can see it did in this case. So when I say I'm working out of a trade, it dropped too quick for me to sell. So I didn't want to blow it out at the bottom, and it does bounce. So in here I buy some more stock. I buy a bit more stock. And then when it makes this double top up in here, I sell the stock. So I bought it at 327. I get some more at 305, 307. My average is right around the 315. I sell the stock. I'd lose a few pennies. Instead of losing 20 cents a share, I lose a couple of pennies. So that's what I mean when I'm working my way out of the stock.